Questions and answers in English and Spanish for accountants. What are financial statements? Answer. Financial statements are structured documents that present a company's financial position and performance over a specific period. What are the main financial statements? Answer. The main financial statements are the balance sheet, income statement, and cash flow statement. What is a balance sheet? Answer. A balance sheet shows a company's assets, liabilities, and equity at a specific point in time. What is an income statement? Answer. An income statement shows revenues, expenses, and profit or loss over a period of time. What does the cash flow statement show? Answer. The cash flow statement shows cash inflows and outflows from operating, investing, and financing activities. What is the purpose of financial statements? Answer. Financial statements provide information for decision-making by management, investors, and creditors. How are assets defined? Answer. Assets are economic resources owned or controlled by a company expected to provide future benefits. How are liabilities defined? Answer. Liabilities are obligations that a company must settle in the future. What is equity? Answer. Equity is the residual interest in the assets of the company after deducting liabilities. What is the accounting equation? Answer. The accounting equation is assets equals liabilities plus equity. What is working capital? Answer. Working capital is current assets minus current liabilities. What are the main sections of the cash flow statement? Answer. Operating activities, investing activities, and financing activities. How is net income calculated? Answer. Net income is calculated as revenues minus expenses. What is retained earnings? Answer. Retained earnings are profits kept in the company rather than distributed as dividends. What is the difference between accrual and cash accounting? Answer. Accrual accounting records revenues and expenses when earned or incurred. Cash accounting records them when cash is received or paid. What is depreciation? Answer. Depreciation is the systematic allocation of the cost of a tangible asset over its useful life. What is amortization? Answer. Amortization is the systematic allocation of the cost of an intangible asset over its useful life. What is goodwill? Answer. Goodwill is an intangible asset representing the excess of purchase price over the fair value of net assets acquired. What is a consolidated financial statement? Answer. A consolidated financial statement presents the financial position and results of a parent company and its subsidiaries as a single entity. What is the statement of changes in equity? Answer. The statement of changes in equity shows changes in the equity accounts over a period, including profits, losses, and dividends. What are notes to the financial statements? Answer. Notes provide additional information and explanations to help users understand the financial statements. What is the difference between current and non-current assets? Answer. Current assets are expected to be used or converted to cash within 1 year. Non-current assets are held for longer periods. What is the difference between current and non-current liabilities? Answer. Current liabilities are due within 1 year. Non-current liabilities are due after more than 1 year. How do financial statements help investors? Answer. Financial statements help investors assess a company's profitability, financial health, and growth potential. What is the importance of financial statement analysis? Answer: financial statement analysis is important to evaluate performance, make decisions, and identify risks. What are financial ratios? Answer: financial ratios are calculations using financial statement data to analyze a company's performance. What is the current ratio? Answer: the current ratio is current assets divided by current liabilities. What is the purpose of the auditor's report? Answer: the auditor's report provides an independent opinion on the fairness of financial statements. What is the difference between US GAAP and IFRS? Answer: US GAAP and IFRS are two sets of accounting standards with different requirements for reporting and disclosure. Why are financial statements audited? Answer: financial statements are audited to ensure accuracy and reliability for users.